everyone to the live Q&A webinar. My name is Danny and I will give you the webinar today. So first, we'll have the previous questions and the common questions that we usually receive from our team from other webinars that has been gathered and from these previous webinars. And then we can move on. Okay, it looks like that. We'll go through that and we'll answer the questions in the best way that we can. Secondly, we'll have the dynamic questions, which is the true purpose of this webinar, to let you guys ask the questions live and see the answers live. And this way you can educate yourself. I'm going to put it right here. Okay. Like I said, the question section is all yours. You don't have to ask for permission or anything. This webinar is live. You can take advantage and ask whatever you need. Okay, all topics regarding trading or AvaTrade. And on the third bit, we will have, it's a bit more informative slide. I will share with you some links here to save you trouble to look for them by yourselves. And lastly, we have the analysis bit here. We commonly cover questions that involve with analysis, and then I get the chance to show you that on the screen. But in case we don't, so we can use this nice slide to simulate and explain to you some things about fundamental, technical and fundamental analysis. Okay, now it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or suggestion. Now, furthermore, what I wanted to say is this webinar is recorded. Therefore, even if you've missed a bit or you want to recap for any other reason, so you're more than welcome to go to our YouTube channel and you'll find on the recorded, all the recorded content there. All right. So the first question that we have today is, what is AvaProtect? Okay. Let's go through first. Let's go through all the questions and then we'll pick what to begin with. Can I get signals with AvaTrade? Okay. How to identify a good entry? Okay, very good. How does fundamental analysis works? Okay, all right, that's very good. So let's get the first question. We'll get the first question. And we are going to paste it in here. Okay. And we are going to pick an asset. I'm going to tell you a few things about AvaProtect. AvaProtect, what it does is it allows you, AvaProtect allows you to protect the position for a certain time frame. Don't worry, you don't have to remember what I'm putting down because it's written right here. When I'm going to look at the product, it's right here, but I'm just putting it down in my own words for you to perhaps be able to understand a bit better how it works. It allows you to protect the position for a certain time frame, and whatever you lost during the coverage, you will get back. There is a fee when using the product. Perfect, so we have that. AvaProtect allows you to protect the position for a certain time frame, and whatever you lost during the coverage, you will get back. And there is a fee when using the product. So we're going to use two scenarios. Scenario A and scenario B, which will allow us to simulate what will happen in a scenario when we make profits and what happens when we have a loss. But we are not going to use the currency Aussie versus Japanese yen. We are going to pick something else. Okay, and I should state something very important regarding AvaProtect. Okay, AvaProtect is only available for Forex, gold, and silver. Okay. Right. It's only available for Forex, gold, and silver. Okay. And it's only on the web trader. On the web trader. AvaProtect is only on the web trader or AvaGo. In other words, not MT4 or MT5. Okay, the reason that I'm putting it down is because sometimes people are looking for that on MT4 and MT5, and unfortunately you can't. There is a question here from Kurt. How can I get rollover dates via API? That is an excellent question. Okay. I'll put your question down, Kurt, but I want to keep it for later on. Let's put it right here. Oh, there you go. All right. Yeah. So as I was saying, AvaProtect has two important rules. It's only for currencies, gold and silver, and you can only use it with a web trader or the AvaGo, not MT4 or MT5. In this scenario, this will be our profit scenario. This will be our loss scenario. What exactly do I need protection from? Because I'm always under the impression that I'm here to make money. And so what do I need protection from exactly? Well, the same that I can gain profits, I can also have losses. And when I have losses, I lose money, and nobody likes that. So the short version to how AvaProtect works is, as I wrote down, you can protect the position, you get the money back during the coverage. What happens after the coverage, though? Let's suppose that I want to, first let's see how it goes. There are two ways to activate this product. The first is to click on the golden shield. The other one is just to mark the box here. Let's mark the box. And then it's showing us that I can pick from 1 hour up to 3 days. So we're going to go from 1 hour or maybe 2 days. It depends if it's gold. Okay. I didn't do anything special. I just decreased the lot size to 0.01. And I'm looking at a fee of almost $4, $3.94, $3.9. And when I'm going to increase the length, I want you to watch what happens with the fee, okay? So I'm going to click here on the plus once. Okay, you see change to 10 twice, now 8. Okay, 1 day, so that's 10, 2 days, 11, almost 12, 11 and a half. Okay, now this is not a permanent equation from what I know, because sometimes you will see e-proportional difference. You see from 1 day it's $10, and then 2 days I would expect perhaps it will be double. So it doesn't exactly work with the same proportions. This is why I recommend you guys to test it out, to simulate. But I think that with the lot size, it's exactly as the ratio mentioned here. So let's suppose that I'm going to go for 2 days. It will be 11 and a half. That will become 115. If I increase to one lot, so 1,150. Okay. Yeah. Okay. Oh, let's bring it back to the minimum. All right, so this is regarding the fee, the length, and the lot size. So we understood so far, those things are the factor to how the fee is going to look like, whether if it will increase or decrease. Naturally, if I'm going to go for one lot and I will decrease the length, it will decrease accordingly. Okay, as you can see, but it's still much higher than the 0.01 that we had initially. Now, let's suppose if we're going to go for just a second. It doesn't really matter. We're just demonstrating the product here, so There's really no need to get into depths with analysis. Okay, we're gonna simulate just quickly how the product works. Okay, so basically we understand something very simple. I can protect the position for a certain time frame, and whatever I lost, I'm gonna get back. Okay, but how do I make comparison between the fee to what I can gain or lose? Because this might have an impact on my decision, right? Therefore, what I can do is I can basically use the take profit and the stop loss. And this is super simple. I'm just going to click here on the take profit and I'm going to click it on the stop loss. And I'm just going to increase to the price that I want. Now, this can be very, very long. So I'd rather just increase this by, let's say, $20. This one is going to decrease by $20. Let's use a calculator for that. Very good. So we have 22.92. Okay. And okay, but let's explain. Even though this is not a beginner's webinar, still I want to recap to explain what take profits, stop loss, and perhaps, well, that's less relevant for us now. But I do want to elaborate a bit more about those pending orders. Okay, so we have regular orders, which is natural market execution. Okay, that's how it's called, market price execution. And we have other orders which are pending orders. Typically, if I would be using MT4 or MT5, I could have used a buy stop, buy limit, sell stop, or sell limit to execute the positions, and as well as my take profit or stop loss. In here, it's much more simplified. So the take profit here is taking the job to close my position with the profit. Naturally, if I'm with a buy, I would want my intention to my intention is that the value will increase, and if I'm selling, I want the value to decrease. Okay, so basically, when I'm buying, I wanted to get to the green line. When I'm selling, I wanted to get to the red line. And if it happens the other way around, I'm going to have a loss. In other words, in a scenario when I'm buying and I wanted to get to 23.36, that's here. Okay, we're looking at weeks. Let's change to days. That would make much more sense. And we can squeeze it a bit and move it to our destined price. Let's take that. 23.36. 23.36. Okay, can make it flat if I really want to by clicking on the line and then modifying it from the coordinates. Click save. In here, we want 22.92 to be our stop loss. Oh, I forgot to say that stop loss taking the job to stop the position with a loss. So profit, take profit closes it with a profit. Stop loss stops it with a loss. If I took a buy and it goes down, I'm losing money. If I took a sell and it goes up, I'm losing money. Okay, just vice versa from making a profit. Very, very simple to understand. And what this product allows us to see now is that we can potentially make 21 quid with a buy. Let's put down here profit, fee, and in here we're going to have loss and fee. Just a second. Okay. That will be a plus, that will be a minus, that will be a minus, that will be a minus, and that will be a loss funded. Okay, let's put it this way. I think it's a little easier to understand. So we have the profit 22 quid. Okay, we have a fee here 11.5. Very good. In here it's similar. we can be precise on what's happening here, but I have a feeling it will it will change. So let's make it 22 flat. The fee stays the same, it doesn't make any difference, and the loss $22. Now, this comparison here is not bad. It's not bad, and I will show you why. Let's suppose that we're going to increase that to 0.5, yeah? And then it's a little more considerable. We have 575 as our fee, and now our profit is 1,116, and our loss is 1,000. Now you have to agree with me, everybody would have been happy to pay $500 to get 1,000 back. Yeah. So with smaller ratio, we don't see a lot of significant difference in between the fee and the potential results. Yeah. But when we increase for one lot or for half a lot, then we see that perhaps it's a little more worthy. Okay, of course, just for you to decide. I'm not here to tell you which proportions to use, but this comparison can just save you from using this product inefficiently. So let's say that I just want to show you one example. So let's stick with 0.1, and instead of 10, let's increase it only by 10. Right? Let's say put it this way, 0.8, and in here let's make it okay. Again, very good. So okay, fix this. So in this scenario versus the other scenarios which we saw, this doesn't look as great. Why this doesn't look as great? Because we are going to pay a fee, potentially a fee of $115 to gain 100. Sorry, to gain 100, or potentially to lose 100, and then we can get it back. But hold on, we are paying 115. Please watch what I wrote in the beginning. There is a fee when using the product. So in this scenario, I can do it. I do have the funds to pay the fee, but I probably wouldn't do it. And the reason is, it's not because I can't, it's because it's not worth to use the product. So I'd rather just turn it off, okay? Or I can make comparison as before, and then I can use it efficiently, understanding that my potential loss is much more considerable than my fee. And of course, it's worth for me to use the product to get back the fee, to get back the losses. The reason that I wrote it down for you this way, guys, is because we are not mixing all together, showing you just the results. You'll be able to identify exactly how much you paid and what was the result when you closed the position. Okay, and then you can know how much you paid and how much you gained and how much you lost. All righto. Do we have any questions, guys? Any something that's still unclear? Anything? Feel free. Should we use it every time? Okay, we have a question from Uba. Uba, you were asking if you should use it every time. And that is an excellent question, but I think that's up to you to decide, because again, if you can utilize with this product and you can make the comparison and make progress with it, obviously it can be very good because you're going to get your losses back. But you got to make sure that you're covering the fee and you're using it efficiently. Okay, if it makes sense. To tell you I'd recommend that you use in every position, I don't know. I don't know your strategy, and I don't know how frequent you're trading. So I guess I'm giving you here the tools to understand how to use it more efficiently. I hope it helps. All right, so let's take what we have here. and simply paste it down in our, okay, this should perhaps be this way. How do I put it? Just a second, guys. Oh, perhaps if I'll minimize that. Did it work? Yeah, seems so. Very good. Question is if I can, no, that's too much. Okay. Really doing it for you guys to be able to review it later on in much more comfortably than, you know, in a form of a list, but I just have no choice. Otherwise it looks very messy. So I'd rather perhaps keep it this way. Yeah, almost. Never mind, let's keep it this way. Can I get signals with AvaTrade? Okay, so I've showed this yesterday, but I've got no problem to show it to you again, guys. Okay, but you may watch it at the where is the question? It didn't go along with, oh, there we go. Can I get signals with AvaTrade? Okay, so let's first clean what we have here, and we actually should get out of the chart. Okay, I can expand and minimize the chart by clicking here on the two tiny arrows, and then it falls down. Okay, and I can see that gold actually have a signal, and that's very good for us. Okay, now exactly how do I, okay, so I want to show you the two ways that you can exit the signal section, and then we can dive in and explain what the signal is. First way to get to use the signals is just by, let's go back to the, okay, so you see the blue lightning icon here opens the signal. Okay, I just clicked it. I didn't do anything special. Just click and it opens. Okay, and we have a buy and a sell scenario. As I have explained with gold, with AvaProtect's example, when I'm buying something, I want the asset to increase. Therefore, in here, what I'm looking at is how many Japanese yen I need for one Aussie dollar. Okay, so the more the value will increase, it means that I will need more yen, right? If it makes sense. So when I'm looking at here at the signal, we can see that there are support and resistance levels. Okay, I can pick either a buy or a sell scenario. Just a second, guys. Okay, for some reason, it seems like my screen got a little blurry on the software. I wasn't sure. Is it? Are you guys seeing the screen here smoothly? See that everything is moving smoothly? Because to me it seems. Oh, now it's back. I think that now it's back to normal. Very good. Okay. What I was explaining is very, very simple. You saw how easily I've opened the signal here. I just clicked here, then I expand the chart with the two tiny arrows. And as I was about to explain, the resistance and support are simply levels on the chart that helps us identify potential opportunities for entry and for closing a trade and opening a trade. Okay, there are many ways to use it, and it's also simplified here at the bottom. We also have the pivot point and the last, which was analyzed upon, and we can simply take a buy or a sell. What will happen if I'm going to go with a buy is it's going to automatically place for me stop loss and take profit. As I have explained 5 minutes ago, take profit closes the position with the profit. Stop loss stops the position with a loss, and it allows you to save a huge amount of time because it's been done automatically. So hypothetically, I could have complexed this position purely with pending orders just like that, and I wouldn't need to spend a minute on the chart. Everything will happen automatically. So let's say I want to execute at 105. Oh, first I would suggest, guys, that you'll match the validity to the signal. And how do you do that? Watch the upper right. You see there is validity here daily. That means that whoever captured that picture, those are daily candles. And for me to be able to identify the same levels, I can't be looking at, oh no, it's daily. Okay, that's great. Switched. Okay, but if it would have been a minute, like it's been before, so I wouldn't be able to see anything. Let's go back to 1 day. And then we can see what we have here. Okay, so we have 107,660. It's somewhere here. 107,450, that's here. What else we have? 106.06, that's here. Okay, 106,250. Now, the reason that I'm not putting too much effort to land it exactly on the price is because it can get very funky because of the different rays that we have. And then it jams the number and it doesn't let you land on the exact figure. You see? If I keep holding my hand, it's going to keep changing the numbers, but it will take me time to precisely put it on a specific figure. So what I can do is, as I have explained, I can just click here, then I can click on here and change it to 660, as it's mentioned right here. I can even paint it in green, and then I have it on the chart. Okay, super simple. The other one, of course, I don't necessarily have to do what I do. Just giving you here the ability to examine the signal to know that it's good for you or not. Because the signal was analyzed on a certain level with certain expectations. Therefore, it's possible that when the signal was analyzed and where the market is at right now is different. That means that one of the scenarios could have been already reached. Okay, the last one is 040, very good. So this is the same as the picture here, just maybe a little. Okay, so we have 107,660, 107,440, 106,600, 106,250, 106,040. Now, when I'm looking at the chart, let me squeeze it a little bit because I have to be honest, this is a little bit difficult to see, so I might as well switch to weeks. Okay. Perhaps 4 hours will give us better result. Not really. Oh, there we go. There we go. That's a little better. That's a little better. It doesn't give us still what we want. Okay, that looks much better. Okay, so let's stick with days. It doesn't make a lot of difference. We can still see it clearly as the signal, and that's not a problem. And there we go. Then we can do some analysis. Okay. So in this case, what we can do, or what we can see, is the support and resistance level. We've implemented on the chart. We can see that typically it's still on a buy trend. There is no momentum here for a sell that I can identify. Of course, I can be wrong, but from what we see a bunch of bullish pairs, gapped up. Basically, yeah, I can't think of a reason why it will flinch down. Perhaps this could have been a potential reversal. Let's put it this way. Yeah, but it didn't happen. Okay, we can also understand from other signs why it didn't happen. Okay, as I said, we have here 4 bullish candles, another bunch. And from what we see, it still has potential to go with a buy. So let's suppose that we're going to click here on the buy. We see that the buy scenario can grant us with $111. The sell scenario, the stop loss can potentially be $40 in loss. So 117 in profit, 41 in loss. Not bad at all. Okay, this is roughly 1 to 2 ratio. Okay, maybe even 1 to 2.7 or 1 to, let's see. Yeah, almost 3. So this seems fine. So I can just go ahead and execute the position, or I can simply modify that to something else that I want. And yeah, there is really no much to it. You just pick a signal and you can hit the road. But what I wanted to show you is the difference between the way that I've picked the signal from here to the signal section is that in here, I will only discover when the signal was produced by clicking here on the light blue icon. But if I go to the signal section, I get to enjoy the linear time frame. Okay, linear order here for when it was produced. And then I can see from the most recent one, can go down and see older signals. Okay, this one has already passed. That's what I've explained, that it was analyzed. This is Euro versus Aussie. Okay, so if I'm going to click here, it's not going to show me potential stop loss and take profit because it already passed the levels that was analyzed initially. Okay, this is why it looks like this. The take profit and the stop loss are blank. And if I'll try and go with the buy scenario, I don't have any take profit and stop loss. Same apply with the sell scenario, just nothing happens. Okay, the signal is not valid anymore. Okay, see there are a bunch of those. Yeah. Okay. Do we have any questions, guys, regarding the signal section? Even though, again, as I've explained, it really takes 10 seconds to click here, then click here, and we are on. Okay, simple as that. Of course, you can do what I did in between, and you can put the lines on the chart, and you can validate, and you can do further analysis, and you can add risk money management into it, and you can change the lot size and all kind of things. But if you don't want to do any of that, you can just pick the signal, click here on the scenario, and you are on. Okay. All right. All right. All right. So we can. The answer here is yes. The signal. Okay. Perhaps I can just write it down in the signal section can be found on the web trader. Okay, at the left and side. Okay, let's minimize that. Okay, or by clicking on the blue lightning icon. Very good. Okay, what else? What else? I think it's quite self-explanatory. The signals also, you should know, it's provided by the Trading Central. We don't manufacture the signals. Okay, and the rest you can just explore by yourself. There is really no much to say. The third question, guys, is how to identify a good entry. Let's grab it, paste it down here, and let's see how we can find a good entry. Okay, so we saw that. We saw what we had gold in the beginning also. Let's see what we can find. Maybe platinum, how does it look? Okay, not bad. All right. All right, so first of all, what exactly does that mean, entry, and why do I have to find it, and how does it help? Just a second. Okay. All right. All right, so what we are looking at here is platinum, and we are looking at a very, very nice bullish trend, which seems to be cut off today and 2 days ago. We keep getting those thin lines coming out of those candles, and it did begin with a firefly here. So this is very visible. Okay, you can just see, I mean, even without being a professional trader, it's quite clear, right? Okay. Right. How does that, because the question was not about the trend, the question was about the entry. So what exactly entry that, how does it help us with trading? Okay, just a second. How does it help? It helps. Okay, perhaps I should have kept this way. Okay, how does that help? How does that help? Entry, what exactly is entry? So entry is where we choose to take the trade. So when I can put it this way, entry is part of the process that you do before you take a position to know if it's worth for you to take the position now, which we have explained that it's possible to buy or sell at the market price, or to potentially look for a better price to take action. Now, this can be done automatically with using execute when price hits, and I can just easily decide to enter at 1,000, okay, for some reason. Of course, we have to talk about that and understand how to find a good entry. But if, for instance, I would want to buy at 1,000, what I could do is I could just click here on execute when price hits, put here 1,000, and it will be execute with a buy at 1,000. This is one way to go about it. The other way is to just wait. I can just wait, and if it goes down, I can execute it manually, right? And the third way, well, it's not really another way. It's just as I've explained. If I would want to take it now, I could have just take it now, right? Click here, buy, plunges the position, no problem. But if I'm looking for an entry, and if I want to optimize my trading, so I need to know what an entry is, and I need to know how to make it efficient, how to find a good entry, like the question in here. So what is a good entry? Let's suppose that right now I think that platinum will keep going up. Okay, it will keep going up, let's suppose. And this will be my resistance. I hope that you remember we saw the signal section, we saw we had support and resistance. We're going to place some lines in here as well. Okay, that hopefully will help us construct a bit more precise analysis. This is futile, we don't need that. Okay. I'm gonna mark some dots here. Hopefully it will help you understand a bit better why I've picked those levels. Okay, and just a second, almost done. And there are many's here. Yeah. Okay, I think that's enough to explain the idea. Yeah. All right. Now, what we can do is we can think of an entry. Okay, so we have few resistance level. Okay, and we have support. Now, why haven't I put a note individually for each level? Because those are levels. And when I get this question, how to find support and resistance, it's not only one support or one resistance. Those are levels on the chart, which we can find in every time frame. And how exactly is that helping us with analysis and with an entry and so on? We can see now that the next station, okay, if platinum keep driving up, the next station is possibly here. Okay, let's perhaps. Okay, so that is our next resistance, right? Oh, sorry, this one. Okay, if it breaks that, it can carry on to the next one. Okay, let's move this guy over here. Okay, and now we can see. But before that, the higher resistance was 150. Let's enable the crosshair. Okay, so because I'm mostly working with horizontal lines, I typically don't enable the crosshair every time I do analysis, but let's enable it to understand a bit better. So we have the 3rd of June, and the highest was 1055, so we can push this down to 155, 1055. Okay, we can see that the next resistance is 1036 and then 1055, okay, which is roughly $20 in difference. And 1036 is roughly $17 in difference. So if I'm thinking of taking buy now, and I see that the market right now is bearish, even though the general trend is bullish, but for the short term, it's bearish. So what I can do, again, looking at the red candle, obviously if it's red, so currently, so what I can do is I can say, listen, I don't want to grasp the length from where I'm at right now, because I feel that I'm pretty much in the middle. This is yesterday, right? We have to understand that those are daily candles. These are daily candles, okay? We have this segment for minutes, hours, days, weeks, and months. So that means that yesterday it's been on that level, and I suspect that it still has the potential to go a little farther down. So instead of buying now and hoping it will get to 1036 or 1055, which are primarily my next resistance line, what I can simply do is I can simply put it to a little lower, perhaps 1010, and then perhaps I'll feel a bit more secured. okay? And if I buy from 10.10 and I'm looking at 10.36 or 10.55, I can even put my take profit at a closer stage. And then I don't even have to get to 10.36, okay? Think about it this way. If I would want to have to acquire $10 per ounce, okay, $10 per ounce from, okay, there are too many numbers, and I think that it might confuse you guys, so we're going to stick with only two. Okay, let's suppose that I'm looking to gain, we're looking to gain $10 per ounce. Now, $10 per ounce, in simple words, that means that we're looking platinum to increase by $10. Okay, from where it's at right now, that means that from 10.19 to 10.29. Okay, which it's possible, it's not a problem. It's been there yesterday and it might even be there today. But if I'm looking for $20 per ounce, which is in here, this is already beyond my resistance. So it might not happen. It will, but I'm not sure. Okay, so what I can do, if I would like to rely on yesterday's statistics, is if I buy from here, okay, and I wish to gain the same 20 which I said, my 20 difference will be here. Okay, let me recap that quickly. Okay, just a second. The question is if it will allow us. No, it's not going to allow us to do this. So 10.10 to 10.30 is $20, and if I would buy it right now, as I said, it will be here, and this is already above the resistance, which perhaps I don't want to do it. Okay, so a good entry can be found if I'm looking at the potential movement for my asset to make. Could be a reversal, could be, as I have explained, this could have been a very, very good entry. Okay, obviously, whoever took it here can gain all this segment as profits until it will go down. And this is one very nice way to go about it, okay, to find your entry. We are looking for a certain movement to acquire a difference per ounce, and we can just look at the best place to grasp that movement. Okay, right now it seems pretty in the middle. If I'm looking at yesterday, okay, and I'm not sure right now I would want to buy or sell. All right, so how to find good entry? It's very, very simple. We can assist, support, and we can identify support and resistance, and through potential movement, we can expect to choose a better price to buy or sell. So we said if I'm looking for 10 per ounce or 20 per ounce, I might as well look at the chart and see what could be a more probable price for me to do it. How does fundamental analysis works? Let's see the questions that we have. All right, so who asked me that question? Oh, Kurt. So Kurt, you asked about this one. I'm not sure that you can do this, but I'm positive that you can get the dates from your senior account manager. Regarding the API, I'm not sure if it's possible, but you can just mark it in your calendar, and then you'll have a reminder, and you'll be able to notify before that by yourself. That's a wonderful solution, and it's very easy to perform. I hope it helps. Now, how does fundamental analysis works? Let's get that bit. And I think that we can use our example here at the bottom. Let's just get that. Let's paste it here. Oh, our question. Where is our question? Okay. Very good. All right. So when we do fundamental analysis, it doesn't really matter what we will be analyzing. Let's suppose, but we are missing here forecast, actual, and previous. But we typically have the previous, and we have the forecast and the actual. Now, how does that work? So let's suppose that right now we're looking at a Netflix report or NVIDIA. NVIDIA has been very popular, right? NVIDIA splitted their shares and they have been in our, let me show it to you. So the market buzz is just one of the tabs that we have in our discovery. Okay, NVIDIA is very, very interesting to analyze, and I highly recommend you all to read a little bit about it, because you can find very nice information about they split the shares and their graph cards, and it's very, very nice and interesting to see. Very educational. So let's suppose that right now we're analyzing NVIDIA's reports, and we see that in their quarterly reports, they anticipate 10 billion in revenue. Okay, it's not bad. Okay, the revenue, 10 billion. Okay, it might be a little high, but who knows? Okay, if we're looking at the previous result, which is 10 billion, and we're looking at the forecast to increase by, again, this is quarterly reports, is something that all of you guys can get freely for public companies, public stocks that are traded. Whatever you want to analyze, such as Tesla or Apple or whatever you want, it's super, super simple just by Googling it. You don't even have to go too far. You Google the company that you want. You can use Bloomberg or something else. You can get the fundamentals very, very easily. And as I said, those reports are quarterly reports, which means that you can use this analysis 4 times a year. Okay. All right. As I said, this is very, very simple to understand. I'm taking NVIDIA. NVIDIA, as you guys know, they make the graphic cards and so many other things, drivers and whatnot. And let's suppose that we're looking at their reports, quarterly reports. It seems fine. Last report came out as 10 billion as an example. The forecast is to increase by 500 million. And now let's put that aside just for the time being. Let's suppose that the actual is a question mark, okay? Just from the moment that the forecast has been announced as 10.5, what do you think that will happen with their share? This could show a possible positive movement, right? Because it shows about confidence and the company that it's evolving and it's well managed and they're looking for higher revenue, okay? But it might be in practice. It might not be in practice. So when we are analyzing based on forecast, we should be very careful and read all the surroundings to know that nothing falls between the chairs, okay? Now, when the actual takes place, it's very, very easy to understand. If the actual is higher than previous, equals possible positive movement, right? If the actual is lower than previous, that means lower than previous, possible negative, right? What does that mean, negative? As we analyze, negative means bearish movement, right? We have the positive, which is bearish, and we have the negative, which is bearish. Sorry, bullish means positive, bearish goes down. And when I'm looking at an actual which is equal to the forecast, that depends on the forecast, that also can show me the potential movement. Therefore, if the forecast is 10.5 and it came higher than the forecast and higher than the previous, that can possibly show a positive movement. If it's lower than the previous, lower than the forecast, it's a decrease, and naturally we can expect a downtrend. Okay, now that's important to know that all of those things are based on logic, and things can happen different in reality. As you guys know, they are recall, and they are not always things go smoothly as we would expect. Okay, companies has to go through different challenges, and obviously it makes the market fluctuate. One more thing you should consider when analyzing typically those kind of analysis between when you're analyzing NVIDIA, you should also check the competition, the competitors. So we have, with NVIDIA as an example, you have AMD, right? With Tesla as an example, you have other car companies that manufacture something as competitors. So it's not only that you analyze one thing and you can just trade one thing. Sometimes you analyze one thing and you analyze the competitors, and you get much better recognition about how the market works. So it might be very profitable. Okay, you can analyze NVIDIA is doing something for one series cards, and maybe AMD is doing something else, and it has an impact. It's very, very enjoyable. Okay, all right. So I believe that the logic here is very, very clear. When something comes good, we can expect positive. If they would have faced a lawsuit or, God forbid, something like that, it's not such a positive thing. So we would have expect the other way around. And okay, yeah, like I said, it's very logic. Okay, so let's share with you quickly. Oh, I see that the time is up. It's very, very unfortunate, guys, but unfortunately, we have to finish for today. And before that, I would like to share with you guys the links here so you can just access all those things quickly. But I'll be frank, the academy and the education can be both addressed by the from the web trader, just by clicking here on the play button. Okay, the tutorials sends you to here. Then you can scroll down and enjoy all kind of content. If you click here on the academy, it's going to take you to the page, and it's going to show you all kind of content. As an addition, I would like to give you guys the Q&A benefit code to give to your senior account manager, and then it can give you a one-on-one premium market review. So as I said, I would like to thank you all guys for coming in today and being such a wonderful audience. I wish you all profitable week, and best of luck with trading, and have a good